Nike just came out with earnings and they have a pretty packed report that we're going to go through today. We're going to look at comparables. What other companies can compare with Nike in the apparel or shoe space? And let's look at other competitors. We're going to look at the valuation of Nike. Is it a buy today? Is it a sell? Is it a hold? And let's just look at other comparable companies as well. Let's look at the entirety of Nike itself. Let's get right into it. I hope you guys enjoyed today's action-packed video. So I'm going to go through this entire report that says Nike beating Q1 earnings and revenue estimates here. They're still navigating that tariff impact of Q1 earnings even though they had beaten. Let's go through this article and see what exactly Nike has been up to for the past quarter. So Nike came out with its quarterly earnings of about 49 cents per share, beating the estimate of about 27 cents per share. This is pretty much comparable to the earnings of 7 cents per share about a year ago. Now, these figures are adjusted for non-recurring items. This quarterly report represents an earnings surprise of 81%. That is astonishing. They have blew it out of the water in retrospect to analyst estimates. A quarter ago, it was expected that the athletic apparel maker would post earnings of about 12 cents per share, and it has actually produced earnings of 14 cents, so a little bit of a beat there, and delivering a surprise of 16.6% higher. Over the past 4 quarters, the company has surpassed consensus estimates 4 times. So quarter after quarter, they've been surpassing these estimates. And it's actually pretty interesting to see because if you look at the numbers, you wouldn't think that they're beating earnings. Or maybe just the expectation is at rock bottoms, but we'll get into that later. Now, Nike, which belongs to the shoe and apparel industry, posted revenues of $11.7 billion this quarter. And that has surpassed estimates of 6.4%. This compares to a year ago revenues of 11.59 billion. So they're actually up, and I believe this is 1% higher. The company has topped revenue estimates 4 times over the past 4 quarters. Pretty remarkable. You would like to see that from any company blowing it out of the water. And additionally, in this report, Nike shares have lost about 8% since the beginning of the year versus the S&P 500's gain of 13%. So we're actually massively underperforming the S&P because you could have put your money into just the entire basket of stocks and have gotten a 5% higher return than you would have now. So investors in Nike are pretty upset that this company has not been fruitful for them. But what's next for Nike? While Nike has underperformed in the market so far, the question has come to investors' minds. What's next for the stock? What kind of leeway or what kind of runway is there and what kind of opportunities do they have? There's no easy answers to this question, but one reliable measure that can help investors address the company is the earnings outlook. And every quarter, the management team is going to give an outlook of what is going to be expected in the next quarters or by the end of the year. Now, not only does this include current estimates and current expectations for the coming quarters, but it also includes things that have been changing lately. Now, ahead of the earnings release, the estimate revisions trend for Nike was pretty unfavorable, while the magnitude and direction of estimate revisions and change following the company's just released earnings report. So the shares are expected to underperform the market in the near future. The article states that it would be interesting to see how estimates for the coming quarters and the current fiscal year can change in the days ahead, given that there is new guidance out there. The current consensus EPS is about 51 cents on $11.9 billion in revenues in the coming quarter. Now, $1.67 of $45 billion in revenue is going to be the current EPS for the entire year. Now, as we get to the end of this article, it states that investors should be mindful of the fact that the outlook for the industry can have a material impact on the performance of the stock. And we know that in the shoes and apparel industry, it is going to be very based off consumer discretionary spending. So, however much money you have in spending, that is going to be a direct correlation, or kind of an indirect, but kind of direct correlation of how much revenues a company can bring in. You know, if you see job losses at insane highs, then you can expect people to spend less in discretionary things like new clothes or new shoes from Nike. Now, Nike, the children's apparel and accessories brand, is expected to post a quarterly earnings of 79 cents per share in its upcoming report, which represents a year-over-year change of minus 52%. They have lost growth by 52% in terms of just straight revenue. They have lost 52% in just earnings year over year for the next quarter. That is what is intended. Now, my overall thoughts about this article is that it could be very difficult in the future for Nike to print and give that return back to shareholders. I really am curious to see what kind of strategies they're able to bring out. Like, we need to get, if you're a Nike shareholder, you need to get a team, a management team that is going to pull every leg that they can to get influence, to have conversion on these products. You saw it with Gap, with Cat's Eye. You saw it with American Eagle and Sydney Sweeney. Can Nike, with all of the influence that it has, create an influence for their, customer, the total addressable market? And if they're able to get some kind of influential person into there, some kind of campaign going, maybe we'll see Nike come back. It, I could totally see that happening. I don't think that jobs are going to be extremely lost and the job market is going to be extremely cooked in the next couple of months, if not by the end of the year. We'll see, time will tell. But I think consumer discretionary spending will remain stagnant as it is. So it is really a test to see how Nike is going to change their marketing tactics or their demand creation strategy. Now, if you just look at Nike's revenue by segment, it does actually seem that they are struggling. Quarter over quarter, they aren't doing too well. But let's check this trailing 12-month report here. So, footwear growth, this is like what Nike's known for. Their shoes and their sandals, most of their revenue comes from footwear. And they have been losing quarter after quarter after quarter. And it just seems that it's not the same company that it used to be. Or maybe it's just slowing down. Maybe they've tapped out the market. Maybe they need to get into a new segment. And maybe footwear is so saturated now because you have people shifting over from Nike to, let's say, like an On Cloud or a Hoka or, New Balance. There's so many other competitors out there that footwear becomes pretty saturated. And if you look at apparel, they're known for apparel as well, the shoes, in addition to their shirts, their pants, their running shorts, and all of their wearables that they can have. This is really not as impressive as it used to be. It is down 5% year over year. That is not really what we like to see as an investor in a company. Equipment growth, I don't really know what this even entails. I believe this could just be like basketballs or footballs. I mean, it seems that they've kind of been able to grow this just a little bit, but it's given that it's only $2 billion in equipment, it doesn't really move the needle. Converse. I actually found out recently that Nike has owned Converse since 2003, which is actually quite remarkable. I didn't even know that. But it does look like the Converse brand has not been doing too well either. If you were to look year over year, the Converse growth has actually been down 18% in sales. Is it that we are in a market where people just don't want to buy things anymore? I would like to say so, but you also have people buying new Hokas. Like I bought Hokas. I would really be curious to see what the sales of Hokas are. I've totally transitioned over to a Hoka wearing person myself, and I stopped buying Nike just because the only times that I'll actually wear Nike is when I actually get it from a gift and just spend it. I just feel like the price to value to comfort isn't there for me. And if you guys were curious as to how Nike breaks out their segment of revenue, most of it comes from footwear, then it becomes apparel, and everything else is pretty negligible, pretty small initiatives as well. But their geography of revenue is actually split among, worldwide. There's North America, which is the bulk of their business, and the Middle East, Africa, Europe coming number two, and then Asia coming in number three, and then Greater China coming in last. But overall, it is a pretty well diversified portfolio when it comes to regional geography. Like there's so many places that you can get revenue from that you would hope they would grow internationally and just grow there. But it doesn't seem that international folks are even interested in Nike overall. At a quick glance, we know the stock hasn't really been doing much. It's actually down year to date. And it hasn't really given shareholders that wow factor anymore. Like you're not buying Nike for what it was 5 years ago. Like 5 years ago, there were some really good deals. Like basketball players were signing with Nike and it would be like a huge thing. But where are those now today? I haven't heard of any in the recent times. Maybe I'm just not immersed in the basketball world. If there's actually like a huge deal that somebody struck with Nike, let me know. Are they taking all of Nike's money away? Because where's the return? We're not seeing the return here. Free cash flows have actually been dipping year over year. Actually, 50% drop in free cash flows. You would think free cash flow drop would be due to capex or something, but this is a pretty capital light business to where all of it is created in a factory and you don't really have to have that many like stores. Like their capital expenditures for the past year is only 430 million. What is going on? Like their margins must be getting eat right now. I just don't understand as to why the business is perishing. Operating cash flow margin went from 15% in August of 2024 to about 8% now. So we've cut margins in half, which makes sense as to why free cash flow just dropped like a rock too. I don't know. I am not super excited about going out there and buying Nike stock today. I understand that it is up like about 4% after hours, but personally, I don't think it really excites me. The brand is cool and all, but I don't get that wow factor that I do with another company that we can get into today. Sure. There is Lululemon. We know Lululemon as a company who does, shoes barely, and yoga pants, yoga shirts, yoga tights for women. And that is the premium product in parallel to Nike. It's more on the apparel side focus, but it is still an athleisure company that is well within the realms of comparables here. So where does Lulu actually compare? Let's look at the metrics. Lulu has been growing stores sales growth over 8% in the past year. You are actually seeing growth in a company. If you look at the revenue by channel, so okay, let's step back and look at man versus woman. Women's apparel is about $6 billion, while men's apparel is about $2 billion, and they're both able to grow almost about double digits. And that's actually really nice growth that you like to see for the value that you're paying. Remember that all of these numbers have a value that we're paying at the end of the day. The stores of Lululemon have actually been able to grow 10%. E-commerce, their online platform direct to consumer, has been growing 7%, and other channels have been able to grow 12%. The revenue is a mix here. You have women's apparel, men's apparel, and accessories like the belt bag and any other hair accessories that people might use. But overall, the company is growing still. Like you can't knock on the fact that they're growing, and they're growing through these different revenue channels. Their stores growing year after year seems to be very nice growth, at least. E-commerce has been growing very slightly, but very nicely as well. And other channels have been growing as well. But I want to take a look at the metrics here. So if you actually look at Lululemon stock, you're paying a 12 PE ratio. That incomparable to Nike, the the numbers aren't even comparable. Like you're paying a 13 P or not a 13, you're paying a 35 PE ratio for Nike for it to intend to lose revenue growth next year. You're paying a 14 forward PE versus Nike, you're paying a 37. Remember, Nike is intended to lose sales year over year next year. So I think the value play here, if you actually really wanted to get into the apparel business and just straight apparel, athletic leisure, the play might actually just be Lulu. Lulu's cheap enough to where the bet could make sense. Risk to reward could be there, though a lot of people don't like athletic leisure or fashion because it comes in and out. Like you saw a couple years ago, Under Armour was huge. And now what is Under Armour today? Not as big as they used to be. So take that as a lesson. People don't really like this industry. People stay away. But if you're going to compare to shoes, I think you got to throw Crocs in the mix here. Okay, for full disclosure, I'm a Crocs shareholder because I think it is extremely value. You are looking at a company that is trading at a forward P of 8. And this company has a price to free cash flow of 6. It is an extremely cheap company for what you're getting. The company has been able to just prove to investors that they're able to operate and just execute. There's a lot of scares of the tariffs that are happening, given that almost 50% of their revenues are from Asia. And we all know that the US doesn't have a good relationship with Asia. We know that this Hey Dude acquisition was pretty terrible that they had to write off on their books. So, which is why you see an inflated PE ratio here. When you are looking at the PE ratio, it's actually inflated due to the write off. They said that it was like a total loss. They wrote off like $700 million worth of the acquisition. Given that, they wrote all of that off, it has hurt their short-term profitability. Now, if you actually look at where Crocs has been generating revenue, 50% of it really comes from this North America, and internationally they have been growing as well. I believe in Korea, China, those are like the main biggest areas for them to grow. This Hey Dude has been about what, $1 billion, less than a billion, because they've been actually losing revenue. They need to turn around this business. I don't know. Maybe they should just spin it off and throw it away because it doesn't seem to be helping. But we need something to come into here and really just turn this business around. Like I said before with Nike, they need a really good campaign that is going to convert for them. I'm excited about what Crocs can offer, because even if they don't grow revenue, their margins are so high that they're able to actually return and give the shareholders a great return for holding the stock. I think the stock should be worth at least $100 today, if not more. That is pretty conservative. But overall, my entire thoughts, if I were to choose between Nike, Lululemon, or Crocs, I think Nike, don't even touch it. I wouldn't even put my money into Nike right now. Lululemon, I would consider it, but I have so much money tied up into Crocs already that, do I really want another consumer discretionary play? Maybe it makes sense to like disperse into like a quarter Lululemon and 75% Crocs, but I think I'm comfortable with my Crocs position, and I'm not looking to dig more into reports to just track that company of Lululemon. I am on the side of Lululemon shareholders will probably be rewarded in the future by holding the stock just as well as Crocs. Given all those things, I am holding Crocs, and I have a $24,000 position in Crocs. Well, it is now $20,000 because I have lost a little bit on it, but I am confident in this company overall. I am not so confident about Nike, even though they had just beat earnings. I don't think the valuation is worth it. Thank you guys so much for watching this video. If you guys learned something new, make sure that you give this a thumbs up and subscribe to the channel. If you guys like more stock analysis like this, make sure that you just subscribe and stay here for the ride. I am Matthew. You can call me Invest Matt. Get it, the pun. But thank you guys so much for watching. Thanks for subscribing, and peace out.